Hello and welcome. I'm Shibani Gharat. This is India Tonight, and along with me is my colleague Sumita Karir. Now, Japanese bond yields have surged to a multi-period high as the world's largest creditor confronts rising borrowing costs. A stressed yen, carry trade potential, foreign asset sales and a massive new stimulus package are all raising fears of higher US and European yields. What does this mean for India? Ishika joins in with the explanation. Ishika, tell us more.
So, in a turn of events, the Japanese bond yield spiked to multi-decade highs, right? So, this is concerning because Japan is used to decades of zero yields. Thus, a jump from this might spark a global crisis, even impacting India to an extent. But as of today, the yields have cooled down a bit. The 10-year bond yield of Japan is at 1.8%, 20-year is at 2.8%, and 30-year is at 3.3%. Now, Japan is the world's largest creditor country. It has global investments of $3.3 trillion worldwide, out of which $1.2 trillion are invested in US treasuries. Plus, $250 billion are funded globally through yen every year. So, to deal with the yield spike and costly borrowing back home, Japan might repatriate its assets from foreign countries, which would lead to a stronger yen, and a stronger yen might trigger the unwinding of a large amount of yen-based borrowings by institutions and other nations. So, anyone who has borrowed in yen will suddenly face higher repayment costs and might default. Further, Japan is coming out with a stimulus package of roughly $137 billion. However, after Finance Minister Katayama's comments and signals about a possible intervention to curb volatility, the yields have cooled down a bit and yen is steadied at 157 per dollar. Now, speculative traders are expecting government to intervene at the level of 160 per dollar.
All right. Thank you very much, Ishika, for putting that story into perspective, ladies and gentlemen. To decode this story essentially on the impact on Japan, the currency, and of course, global markets as well. I'm now joined by Rajiv Agarwal. He's from Doordarshi India Fund. He's joining us from New York. Thank you very much, Mr. Agarwal, for taking the time out and speaking to us here on ET. Now, first things first, the biggest creditor, is set to sort of trigger debt concerns, even though this is a massive borrowing that the Japanese government has initiated. What is the impact that it might have on yen, especially amidst recent currency volatility? We'll talk to you about, the countries who borrowed in yen, and especially on Asian markets. But first, if you could help us decode, what is the impact that this current activity may have on the recent currency volatility?
Good morning from my side, but good evening for your viewers. So, no, definitely, Japan has been struggling as an economy. And I think this fiscal stimulus is likely to help the Japanese economy, but it will have subsequent cascading effects, one of which we are seeing in terms of the Japanese currency getting devalued. And I think given that their debt to GDP is very, very high, I would not be surprised if the currency keeps falling because they're trying to stimulate the economy. One of the ways of doing that is by reducing the value of the currency so that they can export more, import less, and increase the economy. And so I think that is one impact, which is that the currency, the Japanese yen, will get devalued over time, as it has in the recent past. The second impact, I think, will be on the interest yield that you talked about. So the Japanese interest rate will rise over time if they keep spending more, which is what they are doing with the fiscal stimulus, because the risk, the people who are investing in Japanese bonds will perceive it as more risky and therefore will want a higher interest rate.
Rajiv, I want to ask you, this seems like a short-term relief versus almost like a long-term risk, considering the stimulus is clearly addressed for immediate inflation pain, especially for households. Then there are energy subsidies, cash handouts, etc. But financing via additional debt could worsen. Probably Japan already Japanese precarious fiscal situation. So do you look at it as like a short-term relief versus like a long-term risk and more going towards the long-term risk in this matter?
Absolutely. I think these are measures that politicians take to make themselves popular, and that is true across countries. but it only worsens the debt to GDP of Japan. And we already know that Japan is an aging population. The growth is not as much. And the fact that they're running such high fiscal deficit, but also high debt to GDP is only going to make things worse in the long term.
Absolutely.
Yeah.
Absolutely.
Yeah. Sumita,
Absolutely, Mr. Agarwal. The next question essentially that we're looking at addressing is the fact that what is the impact that this will have on, Asian markets, and particularly with respect to the countries that have borrowed a lot from Japan?
Yeah, so I think, let's talk about different countries. I think India in general, when we have various multilateral agencies that they borrow from, in general, they typically hedge their exposure to the currencies. To the extent that they have not hedged, this is a good situation, because now for the same rupee, hopefully it will buy more over time if Indian rupee does not depreciate as much as Japanese yen. That is not what we are seeing in the short term. But over the long term, given India's current account deficit and fiscal deficit versus what is in Japan, I would expect that the Japanese currency to depreciate over time. And so if agencies or governments have borrowed in Japanese yen and they have not hedged, it will help them. And that would be the case even in other Asian countries which have benefited from taking loans from Japan. And as you said, Japan is one of the largest creditor countries in the world. If they have borrowed from Japan, I think to that extent they will benefit if the Japanese yen depreciates and they have not hedged the currency exposure.
Could India's rupee face depreciation pressure if the global funds rotate away from the emerging markets after Japanese move?
So I think in the short term, again, we have seen today that the Indian currency depreciated quite meaningfully. But over the long term, I think Indian currency should act more based on what Indian fundamentals are. And I think Indian fundamentals, economic fundamentals, seem to be strong. Clearly, the growth is strong. I think the short-term pain that we are seeing in Indian rupee is because of the trade situation that we have with the US. Once that gets resolved, I think some of these pressures will get alleviated.
Absolutely, Mr. Agarwal, and we've been seeing some currency pressure on the Indian rupee. But my question with respect to Japan's cabinet approval of 135 billion stimulus is, how might this stimulus affect Japan's role in global supply chains, particularly with respect to semiconductors and green technology?
So I think Japan is a critical component in the supply chain of semiconductors. Clearly, as Japanese yen comes down, I think a lot of industry that moved away from Japan will have more reason to come to Japan. But the flip of that is, do they have the capability? Do they have the people? So one has to look at how that will change. But I would not think that these measures will have any short-term impact on the semiconductor supply chain in Japan. I think over the long term, it will depend on what is the best place for those components to go to in the world. And that is where they will end up.
Rajiv, I want to understand, since, in your previous answer, you very strategically use the word this is something that, people in politics do. So do you think this package is economically motivated, or it is politically motivated, to bolster support for the minority government right now?
I think, it's a combination. Clearly, we have a new prime minister in Japan. She is trying to ensure that she is able to put her stamp in terms of her policies. And one of the easiest measure is to give some relief to the populace. And once you do that, you get a little bit more attention, which I think is good for politicians. But I do think these type of measures are only short-term band-aids, and they don't solve the fundamental problem of the country. And I think that is what we will see even here over the long term.
So, Mr. Agarwal, when you say that this doesn't really address the larger problems of the country, what are the main risks that you see? Is this related to inefficiencies, inflation overshoot, or is this about insufficient targeting?
I think the fundamental issue with Japan has been that the population has been aging. They have not been a society which favors immigration. And therefore, effectively, what has happened is that first, not enough people are coming into the workforce. But secondly, what is happening is that the currency over time appreciated. I know way back when Japanese yen to a dollar used to be around 300 and it went to 100, right? So as the Japanese yen appreciated, the cost of manufacturing in Japan was much more, and therefore the industry moved away from Japan onto other parts of the world. China was one big component, right? Now for Japan to take back that, either its currency has to depreciate a lot or they have to become a lot more productive. I think neither seems really that easy. And so I think this is a fundamental problem any society goes through when they're aging and they become too expensive vis-a-vis what is there in the world. And that is what Japan is facing.
Also, in a way, Rajiv, this temporary assistance is masking the deeper structural issues like stagnant wages and, the weak productivity that the country is already facing, is what you're saying.
Absolutely. I think the solution really to a country like Japan will have to be where they have to bring more people into the workforce, either from within the country or by immigration. The second thing is the productivity that we said. Now, productivity can again start improving, and productivity has been a challenge the world over, right? The new technologies tend to improve the productivity. And in this particular situation, it is possible that as AI and many of these new tech comes into daily usage, maybe the productivity starts improving, and this productivity has to improve vis-a-vis the world, not just in absolute terms, because if everybody has the same productivity improvement, Japan does not have any incremental benefit. So really, it's a question of those two things, which is either you grow the workforce or you grow the productivity for you to do better than the world.
Right, Mr. Agarwal, so essentially you've spoken about a couple of points about increasing productivity and, of course, a whole host of other matters that you have spoken about. But, would you agree with the fact that what the Japanese economy at the moment, what it needs is, besides, of course, the government stimulus, the capex that the government is pushing into the economy, structural reforms to sort of, keep the demand side stimulus on? In view of that, the kind of reforms that the Japanese economy needs, what will be the three key priorities, according to you, that the Japanese government should essentially look at?
Yeah, I mean, I think one of them is clearly, as you laid out, improving the demand side. But, unlike in the US, where there's a lot of consumerism, I think in Japan, people are a lot more careful about how they spend. So I think that may not be easy. And really, it's a long-term angle that the government has to look at. The second thing is, I think they have to look at how they can improve not the productivity, which will be a driving force. But again, as I said, that is not easy because really the habits that we all have are very hard to change. And so all of us get used to certain things and as humans. And so that is not easy. And therefore, adoption of technology, the latest technology, and how that can further the productivity will be important. And that is where I think adoption of AI technologies and how that can help in the day-to-day productivity is important. And then the third, I think, which is really a low-hanging fruit, is immigration. I think Japan should look at immigration and see how immigration can bolster their workforce and bring in sort of the younger talent, which will allow them to grow. And then even beyond these three measures, I think the other thing that Japan can do is clearly they are the largest creditor nation, but a lot of the investments that they do are primarily in debt instruments. Maybe they should look at increasing the appetite for risky investments which have higher returns, which can possibly give them over time better returns on their capital and allow the economy to grow.
And in what other ways can, the government address the foreign investor skepticism about Japan's long-term fiscal stability?
Yeah, unfortunately, those will require long-term measures because in the short term, when you have a debt to GDP of 230%, it's very hard to very quickly address it. The one thing that the government has been doing in the last decade or so is to keep the rates very, very low, and therefore through that not have too much of a fiscal deficit because of the interest cost. But in the short term, other than that, the real driver will be improving the economic activity in the country. I think this government seems to be trying to do that. It's a tricky situation when you have a balance sheet which is as weak as Japanese balance sheets are at the government level, I mean, right? Not at the corporate level, but at the government level, it's quite weak. And therefore, really, they have limited leeway in terms of how they spend their money, and they have to spend that money in the most productive use of that capital, which is not easy for a government to do.
Absolutely, Mr. Agarwal. Just one final question before we essentially let you go. And this is, of course, about, how investors are looking at the Japanese market, about some of these Southeast Asian countries. What do you estimate traders are going to do, investors are going to do with respect to the Japanese market? If investors are going to sort of move out of that market, then where are those monies going?
No, so one thing I would say is, the sentiment is a very, very tricky thing. It can be there one day and gone the next. And we saw that with how when the UK budget came out. So we don't really know how the sentiment will change on Japanese situation. If I just look at it at a distance, I think it is quite obvious to me that I would not be investing in the Japanese government, let's just say, because of their fiscal situation and the debt to GDP, right? And so therefore, I think really what the traders will do will really depend on how they perceive whether these measures will actually help the Japanese economy in the short term or not. My personal opinion is I take a long-term view, and in the long term, they will have to actually address many of the issues that we have discussed before somebody like me would get interested.
Mr. Agarwal, thank you very much for taking the time out and speaking to us here on ET Now. Lots of developments that are happening as far as the Japanese markets are concerned. Of course, the stimulus package, what will it really do to the economy? That remains to be seen. But more importantly, the impact that it will have on other Asian economies, that remains to be seen. But for the moment, thank you very much, Mr. Agarwal, for joining us here on ET Now and sharing your perspectives on this big story. Meanwhile, ladies and gentlemen, speaking of markets, well, let's shift our focus to the Indian markets. It was a rather weak day of trade on the Lal Street today amidst heightened volatility, but on a weekly basis, in fact, the benchmarks managed to hold on to the gains. The Nifty ended with gains for second straight week, while the Nifty Bank's winning momentum continued for the third week. Broader markets, however, raised their last week's gains. The small caps ended the week with over 2% cuts, while mid caps also ended with near 1% cuts. Sectorally, strong buying was seen in the IT and auto stocks this week, while metals and energy stocks, while they were the top laggards for the week. Exactly why my colleague Ashesha is joining us live on this broadcast to take us through the highlights of the trading session on the Lal Street and how the overall week looked in the past 1 week. Ashesha?
Well, yes, turned out to be a good week for Indian equity markets, although we did see some bit of correction in Friday's trade. For the week gone by, Nifty ended with an uptick. In fact, we ended comfortably above that 26,000 mark this week. So clearly turned out to be a good week. As far as Nifty Bank is concerned, this index, remember, was gaining for the fourth consecutive week. And AU Small Finance Bank and some other stocks, the likes of Federal Bank, were also amongst the top gainers from the Nifty Banking Index. So yes, broader markets, however, were under quite a bit of pressure. In fact, Nifty Small Cap Index ended with a downtick of nearly 2.5%. Nifty Mid Cap Index also down 0.8% this week. So turned out to be a weak week for the broader markets. And in terms of individual sectors, we had a Nifty Auto Index, which was bucking the trend. That one was up 1% this week. On the losing side, though, Nifty banking stocks were under pressure. But we also had PSU banking stocks that were under pressure. Metal stocks, in fact, Nifty Metal Index was down 3.5% this week. That's the kind of carnage we saw in the metal index. But for the broader markets, they were under pressure, and Nifty ended above that 26,000 mark this week.
The rupee has hit a record low of 89.46 against the US dollars as the greenback strengthens amid lower odds of a Fed rate cut. My colleague Anurag Joshi is here with more. Anurag, tell us more.
Rupee has plunged to a record low today, and this is coming amid the strengthening of the US dollar due to, and the key reason is the receding probability of a Fed rate cut in December when the FOMC meeting takes place. There's also uncertainty over the trade deal between India and the US. That has dampened the sentiment in favor of the local rupee. The rupee has eased 0.8% versus the US dollar on Friday, and this was the worst performer among both the emerging markets and also in Asia. Now, the US tariffs on Indian imports, they are the highest among the Asian countries. Now, dealers have told us the importers, notably refiners, they were the big buyers. They stepped up buying when the rupee started plunging, and this was at the level of 88.80 a dollar. And there's also a widening gap in the importer-exporter hedging, which is adding to the volatility of the rupee. The Reserve Bank of India intervened. It sold dollars to arrest the rupee's fall beyond the 89.50 levels. And they sold dollars in both the onshore market and the offshore non-deliverable forward market. So the RBI was very active, but below the USD INR 89, they were less active. But I mean, when the rupee touched, crossed 89.40, 45, that's when they began selling dollars to arrest the rupee's crash further.
All right. Thank you very much, Anurag, for putting that story into perspective on what's weighing down the Indian rupee. Clearly, it's tariff jitters and remains to be seen when India and the United States, when are they able to seal the deal, at least the first tranche of it, given that fall is here, and that is essentially what leaders of both the countries had initially planned for. Remains to be seen how the story develops. But for the moment, ladies and gentlemen, let's take a look at the IPO corner and some activity that's been developing in that regard. Well, despite the rush for IPOs on the street, it's been a mixed show from new age listings. Crow's 1 lakh crore market cap milestone that fizzled out after it slumped for 2 straight sessions. In fact, Lenskart listed flat on valuation worries, while Physicswala, which recently got listed, it also slipped. So how have the recent listings shaped up and what's in store for the IPO street? My colleague Ishika is now joining in with the trends. Ishika, it seems the new age IPOs are losing steam. Why is that so? Is this because just related to valuation concerns, or is there more to the story?
Yes. So Grow, Lenskart and Physicswala are the 3 most talked about IPOs this season. Now Grow is India's largest retail broking platform. It had a strong debut with a 12% premium on listing. The market cap even surged above 1 lakh crore post-listing. Now the proceeds are going to be used for cloud infrastructure, brand building and inorganic growth. Whereas Lenskart, a vertically integrated manufacturing retail tech company, listed at a discount of 2%. With a PE of 284 times. Now it is up 6% since listing. Now Lenskart will be using the proceeds for store expansion, technology and working capital needs. Whereas Physicswala, the largest online student community with affordable pricing plans for 600 plus centers and acquisitions using the proceeds. Now it listed at a 33% premium but is now 2% below its listing price. So 3 IPOs, 3 very different stories. But the takeaway is that India's consumer tech sector is booming, but only companies that combine scale with profitability will truly shine this IPO season.
Thank you so much, Ishika, for those details. Now, Prime Minister Narendra Modi landed in Johannesburg today to attend the G20 Leaders Summit. He received a ceremonial welcome following his arrival at the Air Force Base Waterkloof in Pretoria. The Prime Minister is expected to discuss key issues concerning India and Global South during his visit. This visit to South Africa will be Prime Minister Modi's 4th, following his bilateral visit in 2016 and his attendance at the 2 BRICS summit in 2018 and 2023 respectively. Now, this summit is the 4th consecutive G20 meeting hosted by the Global South. Sessions including economic growth, climate resilience and artificial intelligence also at this G20 summit happening in South Africa.
In fact, absolutely, Shabani, that's a big story that we will be tracking over the next 2 days, given the fact that the Prime Minister is in Johannesburg. He was, of course, given a very warm welcome by the community over there. What we're given to understand by the MEA, by a press release that they've shared, is the fact that the Prime Minister is going to address 3 key sessions. And this summit is also important because this is the 3rd time in a row that it is happening in a country that is represented by the Global South. And remember, the inclusion of Global South in the G20 grouping happened during India's presidency in 2023. So definitely this is a big shot in the arm for India, big diplomatic win for India. And of course, the Prime Minister over there. And there you can see, ladies and gentlemen, he was received with a very warm welcome. He's going to be addressing 3 key sessions. And of course, India's message to the world of Vasudhaiv Kutumbakam, the fact that the world is, one family. We have one similar issues. And that is something that the Prime Minister is going to speak about. He will also be holding bilateral meetings with some of the leaders on the sidelines. What we're given to understand from the Ministry of External Affairs is the fact that he will definitely be holding a bilateral meeting with the Australian Prime Minister at 5 p.m. local time, 5 p.m. Australian time. But what are some of the summits, what are some of the sessions that the Prime Minister is going to address? Number one, he's going to be addressing a summit that is related to climate resilience. It's related to sustainability, sustainable development, and more importantly, inclusive development. Inclusive development agenda of the government has been playing out not just in India, but that is something that the Prime Minister has spoken about. The External Affairs Minister has also spoken about, the Commerce Minister has spoken about on several occasions globally over the past couple of years. The other thing that the Prime Minister is going to touch upon during one of his sessions is on critical minerals and artificial intelligence. Remember, artificial intelligence has completely changed the world, but India's approach has been about responsible AI, use of responsible AI. We should not curb the development of AI. However, the innovation aspect should be there. We should not over-regulate. However, all the actors, all the stakeholders have to take responsibility as far as the development and progression of AI is concerned. And then on critical minerals, because critical minerals, remember, ladies and gentlemen, in light of these tariff tensions which have persisted particularly between the United States and China, critical minerals has been used as a leverage by China to sort of get what it wants, get what it wants from the United States. And in fact, there have been certain curbs that were put by China on rare earth exports that have impacted supply chains across the world, that have impacted industries across the world, and has had some impact on U.S. industries as well. But that's the big breaking story. At the moment, the Prime Minister has landed in Johannesburg to attend the Leaders Summit. As far as the G20 is concerned, he's expected to hold bilateral meetings with some of the leaders, definitely with the Australian leadership as well. But that's all the information that we have for you at the moment. There he is, meeting with members of the Indian community. He was accorded a very warm welcome. This is the Prime Minister's 4th visit to South Africa, and he will also be attending IBSA, the leadership summit. Essentially is what the Prime Minister will be addressing. He will be attending that. He will also be meeting with business leaders from the nation. All right, with that, it's time for us to slip into a very short commercial break, but lots more coming up on the other side.